Yes.
Okay.
Thank you, everyone, and welcome to this third Fireside chat on ADDA. And I'm so glad that this is really becoming a very successful series. And I've heard some appreciation that this is becoming very useful for even research ideas and even for teaching also. The videos are being used for teaching. And on this occasion, I thank California State University, Sacramento for giving us this opportunity to create this fireside chat and spread the knowledge across the world. And I'm very grateful that Mr. Zachary Gast from IASB has agreed to talk to us about many of the interesting topics, and I've alluded to that in the email. And just to give a background about our guest speaker today, Mr. Gast is original from Maryland in USA and has more than 20 years of investment experience. And prior to joining the board in 2020, he worked at the Center for Financial Research and Analysis, which is a provider of independent investment research, where he served as the president, directing the organization's forensic accounting and equity research strategy. Before that, he served as a senior vice president at Paulson and Company Investment Managers from 2009 to 2013, and as the sector lead for financial sector equity analysis at the CFRA till 2009. He has also served as a member of the FASB, and so he has quite a lot of experience. He has also MBA from Georgetown University. So welcome, Zach, to this conversation. Now, this time we'll have another expert, Professor Dennis Applebaum, and she is going to take over from here. And she has published many papers on cryptocurrencies and blockchains in accounting, and she has very good experience in that area, and she's going to ask the questions today to our guest speaker. So over to you, Dennis.
Thank you so much for the wonderful introduction, Partha. Thank you again, Zachary, for agreeing to meet with us here today. We're very honored and esteemed that we feel very beneficial that you are here today with us. We really appreciate your time and your effort and energy in speaking with us today. So thanks in advance for your time. I guess we want to start off with a general broad view of what the IASB's initiatives are in the area of accounting going digital. So what are your views on accounting going digital? And what would most helpful in the accounting and auditing profession to be more aligned with the rest of the business world?
Sure. So I'll start by saying thank you for having me. It's a pleasure to join everyone here today. I do have to do one housekeeping notice, though. So as I'm responding, I'm going to do so in a personal capacity. So any opinions are solely mine and not that of the IASB. And then one minor clarification, since I know there's a former board member on. I wasn't on the FASB. I was on the FASB's advisory council for several years. I can't claim two large standard setting bodies, just one. But to get to your question on accounting going digital, it's probably helpful to give a little bit more background on where I come from, which is I've worked in the investment industry for over 20 years, doing a number of things. Most recently, I ran an investment research firm with about 80 analysts. But prior to that, my first task at my fund before that was to build a semi-automated earnings and valuation model for US banks. And it pulled in several thousand data points automatically. And then we would go in as analysts and we'd make some manual adjustments using a lot of what we now call non-GAAP data, but also other things that we would pull from the financial report. And the reason I bring that up is that at the time, finding the data to populate that spreadsheet, and in particular line items that could really give us an analytical edge, was one of the keys to my firm being able to really swing in the spring of 2009. But that was 10 years ago. And today, that model would be described generously as slow and antiquated. And most of the data points for a bank analyst are just de rigueur. I mean, you have to use them. And that's the inevitable bend of progress, which is why digital is something I'm really embracing. And I joined the board not just because I want to participate in the standard setting process. I love that and really recognize the importance of what we're doing on a standard setting basis, but also because I wanted to really help to reimagine what digital financial reporting can do. So that would be my basic answer is I've got tons of ideas on where we can go with digital reporting and how we can bring that process in line with what you see internally at companies and what you see in the broader business world. How that technology helps automate, for example, the audit process or internal systems is probably not a question I'm in the best position to answer because I will certainly not claim to be an expert in audit or those things. It's really, my role is to bring an investor's perspective and then say, how can I apply what I know to improve the processes we have?
So what do you see has to be done, given the accounting and reporting process is where it is today, and where you see it could go, or where it should be ideally?
So in terms of where we could go, I think a lot of what the IASB has done today has been focused on XBRL, which has been a huge task.
Right.
And I think, you know, where we'd like to go, I think was best described by our incoming chair, which is to start to think about this concept of moving beyond the page, you know, beyond the printed document. And, you know, the way Andreas, who's the new chair of the IASB, describes it, and I'm going to embrace his words because he says what I think a lot better than I do, is that we have this system where every transaction and data point in our accounting systems is entered and it lives digitally. And then we have a financial reporting system which aggregates all that data up to the highest level so that it's understandable for users of financial statements. And the systems were designed at the time they were created and over time have been reinforced to produce effectively a written report. It used to be on paper. Now it's in a PDF and it's moving to inline XBRL, but it's essentially this same written product that we've just tweaked. But that's something that we need to address because that's not really how financial statements are used as much anymore. And the result is we have, in particular, financial statement users really arguing pretty vocally that preparers have access to and are using significantly more disaggregated data, and they would like to share in that somehow. And that's the essence of where I think we could go is, do we contemplate making some of that data, whether it's further disaggregated data, granular data, more available, and think through what forms that information could take and how we build it into standard setting. Clearly, that's not suggesting right now I have a vision of we need to do this one thing and we need to push it through. But I think the industry as a whole needs to really embrace thinking about this directional change and determining some of the best solutions to build on what we already have.
So you're thinking it'd be almost like real-time reporting, perhaps? What would be the common concerns raised about using XBRL in that fashion or in general?
So I'm a little hesitant on continuous reporting. Right now. I don't think we're there. I think we've got a lot more work to do on XBRL as a base product first, particularly in an international context. I mean, the benefits of XBRL are huge in terms of reducing costs across capital markets. You know, that data is taken and brought into the data aggregators or directly into investment firms, and they're able to apply all of that. But at the same time, it's also true that US companies are pretty far ahead of international companies in terms of actually using and applying XBRL to their financial reports. So there are a lot of contexts where companies are already using XBRL internationally, just as much as in the US, but not necessarily in the financial reporting sphere. So IFRS filers in the US began doing XBRL filings about several years ago. And the IASB has worked to create a taxonomy for IFRS that can be applied by those companies that are using IFRS and filing financial statements with the SEC under that.
Well, that's wonderful.
But except for those companies, we're only beginning to see now the first jurisdictions report directly under the IFRS taxonomy in Europe in the last couple of years. And for XBRL, one thing we know for sure, based on the US experience and using other taxonomies beyond financial reporting, is that there's a real learning curve for everyone involved in that ecosystem. And we really need, before we start talking about continuous reporting, in my view, we need to focus on that process and using all the lessons that have been learned to accelerate this adoption of digital reporting, because it has such huge benefits. And there are going to be a lot of new twists for international filers. You can't just say, here was the experience in America, so let's just run with that. You have to say, the IFRS taxonomy is different. I mean, IFRS is more principles-based. The difference between the two is reducing over time. But it certainly has resulted in less mandated required disclosures under IFRS, which, at least for those filing in the US, has produced a lot more of what we call extensions, which are when a company actually creates a customized label for a specific data point. And they're really great for when you want to be specific as a company, which is why the system is open and lets you use extensions instead of just having certain mandated data points. But it's equally true that they create a whole host of issues for users of financial statements, investors, and data aggregators when they're trying to go out and assemble and parse the data that's coming in. So I think, taking all of those things, working through the issues we have, is really where the agenda is going to be in the near term before we start thinking continuous reporting. And then my view is it's going to be more around the areas of disaggregation and thinking through what additional pieces we can have first. So after XBRL, it almost becomes a policy decision on where you go.
Well, thank you very much. It's very, very interesting. I'm hoping that one day the PDFs will disappear, right? So anyway, go ahead.
Go ahead. Oh, I have to confess, I will still pull down PDF reports and read them.
But they're probably easier in terms of text to reading as opposed to the XBRL reports. But the charts are very difficult to transfer to other formats from PDF. So I guess entities are using both, right?
Absolutely. Absolutely use both. And I think they're complementary. One, you tend to sit down, on a Sunday afternoon when you just want to read a few hours of financial filings, you pull up the PDF, and when you want to build your model, you go to the XBRL data.
Right. I don't know. I don't read that on a Sunday afternoon, but yes, they're very interesting. So also talking about another topic the IASB has undertaken during the last couple of years, specifically in June of 2019, they basically came up with an observation about cryptocurrencies and what their position would be on cryptocurrencies, or initial findings of how they might want their reporters to handle cryptocurrency holdings. And so what do you see as the biggest challenges and opportunities facing the IASB in terms of accounting for these cryptocurrencies, given the 2019 position statement?
Okay, so there's probably a lot of pieces there, and maybe I'll start with going back to the history of what we've done on cryptocurrencies and talking about digital assets. The board actually started working on the issue, even as far back as 2015 and 2016, when we were working on our agenda for the coming 5 years at the time, and began monitoring on a yearly basis what was occurring a little bit after that. In 2018, the board said, should we take a look at this issue and either work on disclosures, work on changes in accounting? And the board ultimately decided not to take it up. And instead, the IFRS Interpretations Committee took a look at it, which is essentially a group of people who are far more talented at accounting than I am, who take a look at specific issues and fact patterns. And then they say, what is there already today in IFRS standards? Can we apply those standards to come up with a decision about how that fact pattern or issue should be treated? And then they publish a decision. And the IFRIC committee, when they make a decision, those decisions derive their authority directly from the standards. So in 2019, what happened was that IFRIC made an agenda decision, and the decision was specific to cryptocurrency. So it didn't include digital assets, and it was specific to a certain set of facts about the cryptocurrency. So it didn't intend to cover all cryptocurrencies even. It laid out that decision, and then it says, you can take this and follow our thought process in analyzing the issue if you're looking at something else. And the decision that they came to was that there's a couple ways under IFRS that you could account for cryptocurrencies. The first is actually as inventory. This is a little bit different from US GAAP because US GAAP says you can only have inventory that's tangible assets, essentially. IFRS allows for inventory to be intangibles. And then the second was you could account for it as an intangible asset. And I think this is where most of the focus is, because to be inventory, you essentially have purchased it to then sell it, which is not, I think, what most holders of cryptocurrencies intend to do. So people don't focus as much on that one. And as an intangible asset, the basic accounting is you bring it on at amortized cost. If the value falls, you mark it down. And under IFRS, you're actually allowed to upwardly revalue the asset as well. But there is a catch. People don't like, which people don't like who hold crypto, which is those upward revaluations go into accumulated other comprehensive income. And when you sell them, the gains that you've taken through AOCI are not recycled through net income, meaning they exist only in the statement of comprehensive income once, not twice. Under US GAAP, you would tend to see more things where it goes into AOCI, and then when you sell it, you recognize a gain or loss. And so what we would say is IFRS standards do cover cryptocurrencies, at least for the fact pattern we looked at, but it's always the obligation of the preparer to work through the accounting principles. And the starting point would be the specific rights associated with the asset. And figure out if they're within the scope of the standard. So that's the history. That's what happened in 2009. But we do recognize there might be a desire, we're hearing a little bit, to create specific accounting standards for cryptocurrencies, digital assets, all these new and different things. And so we've also, going forward, put out a request for information around an agenda consultation, where there's it includes a potential project that would say, should we take a deeper look at this? Should we create specific accounting for these intangible assets that differs from generic intangible assets, which is something that's been done for several other assets over time? And that agenda consultation process is something we're taking feedback on right now.
So I'm sure my audience will be very interested to hear more about your agenda process. So, how do you formulate, first, the idea of following up on an idea or a process or a project, and what does that process look like?
So it looks a lot like what occurs in the US. We go out about every 5 years and we say to stakeholders, which are national standard setters, regulators, preparers, users of financial statements, here's a list of things that we think people might be interested because we've heard them along the way in the last few years and we haven't picked them up along the way. What do you think the priorities should be? What do you think we should be spending time on? And with all of these things, it's a prioritization process. So for example, in our agenda consultation paper, we laid out 22 potential projects. And then we said to people, hey, is there anything we missed here that's really important? And we've gotten suggestions on things we missed and should work on. And we only have space for 2 to 3 large projects because the work plan is already not entirely spoken for because we have space for a little bit. But if you think about some of the big projects we've been carrying on for years, we've got to finish them out. We've got to review the big standards that were released over the last 4 or 5 years and make any tweaks that are necessary. So it's not an infinite universe of things we can cover. So the key criteria that we would look at when we evaluate the projects is getting the feedback from people allows us to make a decision on whether there's a deficiency right now. Is there a real problem with the way particular transactions are reported? The second big one is how important that matter is to users of financial statements, which as a former user, I'm particularly sensitive to. You know, if something is going on and users just don't care, then there's no real need to address it, or not as much need perhaps. And then the last couple of things are we do look at types of entities that are likely to be affected and how pervasive or acute the issue is. So as much as we talk about investor needs, it's also true that, you know, if every company is having the same problem,
right,
we need to address it.
So who are most of the most contributors? Who usually gives you feedback or ideas about what projects the board should consider? Is it firms? Is it companies? You know,
it is all of the above. So we will almost always get feedback from preparers of financial statements on what they think is important. The national standard setters, investment firms will weigh in, and individuals too. As well as, I should point out, the academic community.
Great.
And as a little advertisement, the process is still open. It's open until Monday. And we have a survey online that people can fill out to say, hey, I think this issue is important and here's why. So it's not just how many votes does this get, it's what are your arguments and how convincing are they relative to our criteria.
Well, that's wonderful. So academics could also go on there and participate and give feedback in the survey. In addition to what other areas you think academics could contribute to your initiatives?
So academics play a role in virtually everything we do. It's something we rely on. You know, this is a community that gets paid to do research, which they then give us for free, which, God, we love that. I'm mostly kidding, but no, it's a great partnership where the academic community can work on the issues that really matter to them, and they can inform what we're doing. So working extensively with the academic community is just built into how we operate. And in fact, 1/6 of the board we have right now is former academics. I guess they're standard setters now. But their background is academics by nature, the same way mine is as a financial statement user. So I would tell people, you know, if you're interested in making a contribution, a great first starting point, if you're doing some interesting work, is send it our way. We're not only open, we're eager to receive it. And we do search out topical information. I mean, it's not like we're sitting here just waiting for things to come in. But we always appreciate someone highlighting interesting work. And in that context, one of the things that's, you know, been really reinforced with me is that one of the greatest contributions, not one of the greatest, but one of the greater contributions that the academic community is they've got this wealth of descriptive statistics that academics sometimes don't realize how important that stuff is to standard setters because it's a baseline and you can work for it. And so if you have those things, send them through our way. We actually have a spot right on the website that's specific for academics that describes a lot of the process and where people can contribute and some of the events we hold specifically for the academic community.
So academics could contribute a paper there, submitted paper, for example, or a thought piece. Yeah,
and it's at the very least, it's got the contact information for the people who would receive it and then go forward with it.
Now, do academics working on any projects with you, or no?
They do. So we have a number of conferences and webinars that we do with academics, and we'll work, not necessarily, I wouldn't say alongside them. So what we try to convey is, here's the issues we're interested in. Here's the type of information that would be helpful, or the type of answers we're looking for.
Right.
But we don't step in and say, you should design a survey or you should design a study that looks at this in this way. You know better than us how to design the survey. We just want to point to, here's what would be great for us to have, and you tell us how you can contribute most meaningfully for that.
Well, that sounds like a wonderful opportunity for all the academics in the audience, right? Also, we have another question here. In August of 2018, The Economist magazine's Technology Quarterly stated that, quote, there is no sensible way to reach any particular valuation, quote, for cryptocurrencies. What are your thoughts on this? So going back to cryptocurrencies again.
That sounds like Warren Buffett.
Yeah.
Which I think points to something, which is that market valuation techniques, so what investors might do, and accounting valuation, they're distinct and they can and do sometimes overlap. But accounting has probably a stronger set of principles about what conditions have to be met before you get to really evaluation. And I think The Economist was speaking more from an investor perspective. Probably. When they said that. So I'm going to kind of take off the accounting hat first and roll with my investor hat. As an investor, I have sympathy for this view. How do you value something without cash flows? It's really hard, but it's not also a new investing discussion. There have been furious debates over the value of gold. Among other things, gold's probably the headline one that everyone talks about, where famous investors have chimed in with sort of the same comments. But there might actually be an analogy in commodities that's worth looking at, which, I worked with some really smart people who invested in commodities, and once actually one of them took the time to sit down with me and say, look, if you look at the price of most metals, you can really demonstrate that over the long term, commodities tend to be priced at about the 85th percentile, I think was the number, of the cost to extract them. So if 85% of companies can extract silver for $2,000 an ounce, and the rest have a cost above that, then that's where long-term silver tends to price. And the cost to extract goes up or goes down over time, depending on technology. And at least in my mind, for, say, a proof of work cryptocurrency like Bitcoin, there's that direct analogy. It costs a certain amount to mine Bitcoin through the proof of work process. And that might give a great starting point for an investor, in my mind. But unfortunately, that back of the envelope calculation while holding a glass of wine is not really up to par for accounting standards. So that may shock you. But it's not really going to cut it for what the IASB or what the FASB has to do in terms of creating a valuation process. Right now, we have a whole standard IFRS 13, which is dedicated to fair value. And that's where this lack of cash flows is a really key issue. There are also processes to use prices quoted in active markets. But I'm not up to date on every cryptocurrency that's out there, let alone most digital assets. But I think everyone can agree that for the vast majority of those cryptocurrencies, there's nothing approaching what we would call an active market. Very few trades, very illiquid. And so we really have to start looking other places or coming up with a different process, or if it comes through as part of the agenda consultation, then we'll have to look at creating a new set of specific accountings for those cryptocurrencies, or potentially a broader universe of digital assets.
Yes, but I'm aware that many, at least in the United States, many reporters are nervous about the very valuation issue. How do we value our current holdings of cryptocurrencies, particularly if we try to sell them? It takes, it could take 2 or 3 days to remove your position, or 10 minutes. It really depends on the pricing. Yeah,
it's a tough one, and not insurmountable, though. I think there are a number of assets, there are a number of things that exist where those same issues exist. They're not necessarily new issues. They're just being tested in a new concept or in a new context. So what I would say is, as you go and think through, there are a lot of analogies you can draw in terms of thinking through how to get to the right answer and guiding people towards that.
Well, thank you very much. It's been very helpful, I'm sure. What is the IASB's position regarding the immense energy demands, going back to proof of work that you just mentioned, regarding the proof of work platform of Bitcoin? So how will we account for Bitcoin's huge impact on sustainability now that more and more companies are looking to go through sustainability audits and sustainability reporting?
So right now, I would say the accounting standards don't have a position on some of those things. If you look at the principles in the standards, you can see that most of those energy demands are going to manifest as period expenses. Like, that's the view, is you're paying for electricity and that flows to the income statement as an expense. Although I don't think there are a huge number of data miners that are doing the financial reporting for that.
No.
But I think what's interesting is that there is a lot going on in terms of those long-term costs of these intense data operations, because they're very real. It's a much bigger topic than Bitcoin or even cryptocurrencies. But in regards to that, the board did put out some educational materials at the end of last year. And I think the FASB might have done something very similar this year, really focused on this intersection of sustainability issues and financial reporting, and where you start to get into, here's where these issues will play out in your reported numbers. And that could grow, going back to the agenda consultation. Even beyond cryptocurrencies, another one of the topics we have for discussion is whether we should look at things like climate issues more holistically to identify where certain issues, and a big one is contingent provisions, where a company might have an asset and there's a significant risk that due to climate change legislation, that asset might somehow become impaired. And that would be the crux of a potential project, is start looking through the standards and saying, where do we need to be a little bit more targeted? Where do we need to rethink long-term risks versus short-term risks, and have those start to flow through the financial statements directly? And then there's a second area that's worth mentioning. The board is not engaged in this. The trustees of the IFRS Foundation, so the parent of the IASB, are in the middle of a consultation that's been going on for about a year now. And it really came out of a move to consolidate sustainability standards, which were growing and really being driven by the preparer and user community, which said, we want this information, we want to convey this information, but we have all these different standards that people are asking us to apply. Like, please, oh, please, just tell us what to do. And don't tell us to do all of it. So what the trustees did was, once that consolidation began to occur, they asked if the IFRS Foundation should play a role in sort of unifying those standards and what that role should look like. And the response has been really positive. So they've been working on that since the responses were collated, so 5 or 6 months now. And they're working towards hopefully having more to announce in November for what would be called the International Sustainability Standards Board.
And so so do you see that more and more companies will need to follow the guidance of the IASB, which you just mentioned, or maybe they have to considering the impact of long-range climate risk, for example? Would that be something new that companies may want to consider and report a long-range climate risk for their investments and their holdings, or their practices?
I think more and more companies are doing it anyway, even before the IASB. Hopefully with the IASB and similar initiatives, because it probably won't apply everywhere, is going to do is consolidate and give people a great baseline. And it's really important to say the sustainability standards groups that have been out there, and there are a number of them, they've done some amazing work, and there's a lot of buy-in now in the investor community and among preparers around those standards. And that's because they've been working really diligently for 20 years. And so what the IASB hopes to do is take that work and really hone it into a singular set of standards that maintain a focus on what matters most to capital markets participants. And so I can't tell you exactly what those standards will look like.
Okay.
The board doesn't exist. It's not staffed. It hasn't created the standards. But there have been some decisions. So, provisionally, they're going to focus on climate first and then move on to some of the other sustainability issues, just because there's a sense, I don't know why, based on the weather the last few years, that climate really is time sensitive, and we need to address it first and then move on to the others. And so within that context, we're trying to think at the board holistically about stakeholder needs on disclosure. We focus on what are the monetary amounts that appear in financial statements. And we've got our potential projects on how we hone those amounts and how we arrive at them. But we also are creating right now what's called a practice statement on management commentary. In the US, the SEC would govern MD&A. We have this practice statement that says, here's where you can put management's view of what's going on and convey some of the information that doesn't go in the financial statements. And as we've conceived of it, we've definitely taken the view that it can be a holding place for all those non-monetary disclosures that affect capital markets investors. And those are the disclosures and standards the IASB is going to work on. But it could hold more because there are also national and regional bodies. So I mentioned that not all jurisdictions are going to apply those wholesale, and they might focus on even more issues. So not just the impact on the company, but also the impact of the company on others. It's called a double materiality standard.
Okay.
And some regions have signaled already that they're going to pursue sustainability reporting that goes beyond capital markets materiality. And our hope is that the pieces we're assembling can kind of go together in a building block fashion or a modular piece, where you say, here's what's in the financial reports, here's what's in the management commentary. And then if jurisdictions want to add to those requirements, they can do so fairly seamlessly.
Now, as a practice statement, would that be audited by accounting firms or no?
So the practice statement doesn't, I want to make sure I get this correctly. So you do not have to do the management commentary in order to say that your financial statements comply with IFRS standards. So not every jurisdiction will adopt the management commentary, and jurisdiction by jurisdiction, it varies on what's audited and what's not. So I can't say for certain what
Okay.
each jurisdiction will do, only that it's going to vary based
Right.
on the country or region.
So talking about different jurisdictions, what is your opinion as an IASB member, your own opinion of the El Salvador Bitcoin, being that the government claims that it's issued this fiat currency, which is actually Bitcoin still?
Bitcoin, it's an interesting experiment. I
Yeah.
haven't followed it super closely. Following the news that I have, it looked like there were some hiccups in the initial outreach. But it does raise some of those interesting questions that we need to think about going forward. Like even under the current accounting rules, there's some who argue that now that El Salvador has adopted Bitcoin, does that make it a currency?
Right.
Does that make it cash? But from our perspective, the accounting standard is pretty clear. Cash is a financial asset because it's used as a medium of exchange.
Mm-hmm.
And what's pretty clear is that in El Salvador, everything's still quoted in US dollars. You just have the ability to sometimes pay in
Mhm.
Bitcoin, which means that Bitcoin's not really a unit of account. So it
Right.
simplifies things for us in the interim. But it'll be an interesting thing to watch and see where it goes.
I think it's a good idea to follow and see. This is not a question we prepared for, but I know that there's been discussion lately that the countries that are taking on the more of the Bitcoin or the cryptocurrencies are those that find it easier to conduct their transactions using that modem of exchange as opposed to issuing a fiat currency. So we're seeing more and more successful in countries like Afghanistan, where there is a black market of digital currency right now. Trades because their own currency is in trouble. So we're seeing that, anecdotally in the marketplace.
Yeah, I haven't followed that closely enough.
Yeah. Another question I had was about the German standard setters. So, you mentioned with earlier discussions that perhaps these, the treatments by the various regions might have different treatments for the crypto or digital assets. Could you explain a little bit more about that, please?
Yeah. So when we put out our agenda decision, we always look for comments on those agenda decisions before they're finalized. And the German standard setters did weigh in and say, we think you should look more broadly at what a cryptocurrency is and look at more broadly at digital assets. I think, it was pretty clear that what we did was scoped fairly carefully to not do that. As standard setters, you really have to be careful because when things are too broad, you start taking on projects that are bigger and bigger and bigger and go slower and slower and slower.
Right.
And so particularly for there's always this view that you want a specific fact pattern that's solvable. But the same could go for most of what we do. And so that was how they were able to move so quickly, which is really the role of the interpretations committee, is to move quickly and get people an answer that they can work with. For our agenda consultation, which is the forward-looking process, the project description we have says we could focus on cryptocurrency, we could focus on a wider range of potential assets. Just reminding everyone involved that cryptocurrency is not one thing. It's lots of different things. And even just addressing cryptocurrency is going to be addressing stable coins and Bitcoin and all these other permutations that might have their own fact patterns that we have to follow and come to different decisions on, or say, this one is already handled here, this one we'll have to create a new accounting standard for. And the result of that is the broader we go, forget NFTs and digital art and all that stuff.
Yes, exactly.
The topic just gets bigger and bigger and bigger. And suddenly, the argument is we need to get to cryptocurrency because it's so fast moving.
Right.
But if we take on too much at once, we're not going to get to an answer before the industry is completely evolved. So we need to be careful in getting that right balance. And we're asking everyone, what's the right balance, basically.
Very, very interesting. So given that we do have this guidance from 2019, how authoritative is it? So how do you enforce the rules for these accounting rules for cryptocurrencies?
So the due process handbook we have is pretty crystal clear that
Mhm.
agenda decisions made by the IFRIC derive their authority from IFRS standards.
Mhm.
So that's the source material of the committee's decision.
Okay.
And the board actually now approves those decisions as they're released to confirm that they reflect the standards. So yes.
Okay. So it is authoritative. So everybody who's holding these cryptocurrencies better be mindful, right?
Yeah.
Yeah, that's wonderful. And hopefully the FASB will have similar rulings very soon, or they're in the process here in the United States as well. We do have a question from Rajiv Dugar, but it's very lengthy. So I will try to break it down into small segments because there's several questions in here. He starts out by asking, does the experience with current crypto rules offer any insights about the role currently assigned to the statement of stockholders' equity in financial reporting?
So certainly the issue I talked about before, where revaluation gains can move down into accumulated other comprehensive income. It certainly brings up the question that comes up fairly frequently of what is the right amount of recycling, and how do you prescribe when gains or losses that are sitting in accumulated other comprehensive income should then flow through net income versus staying directly in equity. And I don't have the answers for that. I think the lesson is we need to continue to look at that. In the agenda consultation process, that's just in meetings in the last week, I've heard you guys should take a look at recycling and what goes through. So I think it certainly brings the focus back to those same issues.
So he goes on to ask, in the end, all income flows, be they NI or AOCI, subsume into the stock of equity, which makes it SOSE, from the equity holder's perspective at least, a kind of apex or focal statement, arguably as important as the income statement. When making the SOSE and apex statement alongside the current trinity render much of the politics of the NI-AOCI debate redundant, making the regulator's life somewhat less challenging?
It would be nice.
Yeah.
I would say the feedback we tend to get from investors, the users of financial statements, is they tend not to spend as much time there. So they want to focus far more on the three primary financial statements and what flows through there.
Yeah, I think Mr. Dugar wants to ask a question. He's, if you want to unmute yourself, you may ask the question directly.
Thank you. Part of the job of, I thought, both the IASB and the FASB, at least the way I teach it, and I'm one of the people, I'll admit, I'm one of the prime culprits. I often send my students to conversations that Partha has been so kindly orchestrating, because it makes it very useful for them to come and see the regulators actually, talking about issues that we bring into the classroom. So this is really great, and I thank you for doing this. The issue then becomes that, is it part of the conceptual framework component of what regulators do, both the IASB and the FASB, to move this front and center so that it comes to the attention of both the academic community in terms of how we train our students to think about it, and how we train future analysts, and how we train future investors? And is it also part of the mission of the regulatory bodies to see themselves as also gently steering financial reporting in a direction that might actually render some of these issues more transparent? Is investor education, is the education of the business community, and the creation of a better financial reporting environment, surely it must figure somewhere on the agenda.
So I would hope it's the primary component of what we do. I mean, it's what the members, certainly myself personally, it's why I'm there. The different avenues you can choose to take, I think there's a certain pragmatism of knowing how much you can steer towards the improvements that you think would be beneficial, while understanding the constraints of all the participants in the process who may not share that view. And if you're going to decide on directions you're going to go, you have to take into account all those stakeholder views. And sometimes you'll have very strong views that a certain avenue is the way to go. But if everyone else disagrees, then I think on that particular issue, I probably haven't spent enough time to know whether it's the right solution on where to guide people. I will say as an investor, it's an area that was used sporadically and primarily because of the treatment of certain instruments rather than as a primary tool. So that may not be entirely satisfactory.
No, I was just struck by the tone that you said in the end that it would be nice, or it would be nice if the people demanded it. But often people have to be led, if only it be from behind, and certainly putting the current ranking of the statement of stockholders' equity in financial reporting trinity, whether to bring it up or not, that might be one of those long-range projects on which the regulatory bodies could start a conversation that might take a while to converge. But nonetheless, it would surface the issue because this is something that keeps coming up. But I don't know that either the FASB or the IASB, and it's certainly not my intent to put you or the IASB or anybody on the spot, because we know the history of accounting regulation, how it's gone, both in the United States and in other countries, right? It's a fraught issue. There are important stakeholders who have very powerful voices. But nonetheless, as a long-run agenda item in shaping financial reporting for the future, would that be the kind of thing that that might be a long-range project that's consistent with the approach that both bodies have taken when they put out the concept statements, right?
So it certainly is a potential project. It's not one, to my knowledge, it doesn't appear in either the FASB or the IASB's potential projects list.
Yes.
Which is why we have that catch-all. So what I would say is we've asked what we've missed, and I would encourage you, if you think we've missed it, to put it in there, and then it enters the fray in terms of discussion.
That sounds like a perfect suggestion, right? So thank you so much, Zach, for answering those questions. We have another one from Dr. Brigitte Millman in the audience. She would like to know more about your perspective on data as an asset in IFRS beyond the digital currency. So looking beyond cryptocurrencies and what we were talking about specifically, is data an asset for companies, and how would they declare that? How would they value it even?
How do they value it? I don't know the answer to that. So my absolute go-to is going to be one of the projects we have on our agenda consultation is the treatment of intangible assets, and data would certainly fall squarely in that category, and is one of the things that's explicitly talked about as a potential project. But there are different views of what we could do going forward, and picking the right one is going to be key. So when some participants talk about intangible assets, what they're talking about is data is valuable, and therefore we should be recognizing and measuring on a fair value basis this intangible assets or all intangible assets. What some participants are saying is we have a great basis for recognizing costs already. We think the importance of intangible assets has moved up, and we should focus more on capitalizing those expenses so that we get the value of those assets as they've accumulated as costs appearing on the balance sheet and not flowing directly through net income, because you don't want this distortion between acquired intangibles and internally generated intangibles. And then there's yet a third group who says data is really valuable, and you should tell us more about the data you have and why it's valuable and what you think it's worth. But we don't think you should focus on recognition and measurement. And so I can tell you, as we've gone through this process of gathering feedback, we've heard absolutely every view within that.
Thank you very much.
So does anybody else have any other questions to ask of our esteemed speaker today? This is your chance to hear directly from an IASB board member about any questions or concerns you have about any of these technology cryptocurrency XBRL issues? If so, please let me know in the chat, and then we can focus and highlight you so you can ask your question. This is like a classroom today. Very few students are asking questions. This is
I can ask a question.
Okay.
So, Professor Applebaum brought up the question of charts, figures. They don't translate too well, right? And I have found that in teaching. Oops. Oh yeah, I'm not unmuted, right? Good.
You are.
So I found that in teaching, that is one of the most difficult areas. We can download data, we can put them into large databases, we can run them in R or Stata, find the associations. But then graphing requires a broader bandwidth, which trained human processors bring. So current AI is mostly focused on black box approaches, whether it is to image processing or to data analytics. And I'm wondering whether your comment, Mr. Gast, about how you pull down the PDF, my students do too. Even in the digital age, being computer literate as they are, they need the hard copy or the entire document because it's human readable. So my question is, given that AI doesn't have the same bandwidth that a trained human processor does, and accounting is basically the construction of human readable narratives, right? If you take that gap, is that something that gives you cause to pause as a regulator about creating structures that we can let loose AI on, but which kind of have this gap in the current technology between what we humans can construct out of a well-designed annual report and what the AI that we write or create can do?
Yes. So the difference between what a human can put together and what a machine can do with data, it's real in both directions. So the machine can parse through a lot more information than the human might be able to, given a simple set of rules or given the tools to assemble the rules itself. Whereas on the other hand, it can also take a lot of data that isn't relevant and impute it. The consequence, though, and perhaps this comes from my background as an investor, is if you take data that is a true set of facts, and whether because you apply AI or because as an analyst, you just get it wrong, and you come up with the wrong decision, the capital markets have consequences for that. And those consequences are real. And as an investor, you live with that every day. You've got this efficient markets hypothesis that we all believe in, right? Except our job is to prove that that's wrong. And the capital markets are pretty good at telling you when you're wrong. So I would say there's a natural consequence and there's things that follow from it. Like you really want to think about retail investor protection. It's one thing to say that a big pension fund or a big hedge fund is going to lose some money because they parsed data wrong or they thought through it incorrectly. But as long as the retail protections are there and you've got some controls around making sure you're doing things correctly. I mean, my general view is if data is factual and it reflects and faithfully represents the performance of the business, then I don't have a problem with making it available. There's a cost benefit to making it available, but I don't have a problem with it being available. And, part of that comes from, again, my background is as a banks analyst, you get these great financial reports from the SEC, right? When you're looking at a US bank.
Right.
But then there are these regulatory reports and they have line items that don't exist in the SEC. And you have to understand how they all fit together and what's included in what line item. But if you can take that additional data and make money from it, then you're making a more efficient capital market. Whereas if you use it incorrectly and lose money, then you're not going to make money and the capital market responds to that.
Thank you very much. That's very interesting. I have another question, sort of on the same vein. Um, in our country, PCOB has said, at least a board member said in a presentation that auditors and accountants have to understand the technology, even if it's very, very complex. Are you expecting a similar type of educational training from your reporters in IFRS regions?
I'm not sure I understood.
Okay,
Can you say it again?
So all accounting and auditors have to understand the complex technologies. They cannot, and the reporting firms have to understand the complex technologies. And so the question is that also a similar expectation for our reporting entities in IFRS regions?
So by and large, yes. We try
Okay.
not to get too far ahead. I mean, there's a curve, and you don't want to get too far ahead. I think we're helped by the fact that under IFRS, there's actually two standards that you can apply. One is IFRS standards, understandably, but we also have what's called IFRS for SMEs. So it's an IFRS specifically designed for smaller companies, and there are criteria that are created to filter out who gets in and who doesn't get into that classification that individual jurisdictions can adopt. And the value of adopting it is that for your smaller companies who can't be up on that technology curve to the point where you would expect them to be as a full reporter, it's got some simpler recognition and measurement rules. And then it also brings in different disclosure requirements. So that you don't have to treat everyone as a one size fits all. And it's a little bit different way of distinguishing than the FASB does. I don't know all the details of the FASB's process for private companies, but it's a little bit different cut at getting at the same concept of you don't have to make standards that fit everyone. You can think about one universe of companies that are more capable of keeping up, essentially, and then another universe where you go a little bit slower.
Thank you. We have a question from Subra Tripathi. So Subra, if you want to ask your question. Well, I'll go ahead. Oh, go ahead.
Please ask the question on his behalf.
Okay, sure. With cryptos increasingly becoming part of investor portfolios, how would portfolio risk models evolve? Clearly, cryptos don't lend themselves well to parametric models.
I honestly don't know. And that's because as an investor, I was a specialist for sure. I did banks. I oversaw a team that covered everything. And crypto was one of the things that were covered, but we have to carefully distinguish in our work between preparers of financial statements who are governed by IFRS accounting standards versus the investment companies that are covered, but very differently. So the specifics of the risk modeling that would incur for an investor in cryptocurrencies is something that's complex enough, having been a bank analyst, that so I know about bank risk management. I can only assume that crypto risk management is even more complicated. So I'm going to know enough to say,
Thank you very much. We have another question from Banikruta Mishra.
Professor Banikanta Mishra.
Okay. Do you want to ask your question? You're muted.
You're on mute.
All right. Hello, Jack. Great to listen to you. It's a philosophical question, as we professors sometimes have to ask this. Is El Salvador's making the Bitcoins a legal tender? Is it fundamentally an accounting question or fundamentally an economics question? I know I'm trying to create walls and sometimes we should not. And the second part of the question is there a risk that if this breaks the US's currency hegemony in El Salvador, the US will also make it a political question?
So I would respond that the role of accounting is to reflect the economics of the world and of the preparers. And so it is both. And as insofar as the adoption of cryptocurrency anywhere changes the basic rights and obligations and attributes of cryptocurrency and change how we should view them under accounting rules, it will matter. I think I said I don't think we're there yet. For the policy question on the US and El Salvador, again, fortunately, the FASB might have to address that one, but I don't think the IASB will. I don't think the FASB will either.
Thank you.
Thank you very much. We have a question also from Edward Lee. So Edward, if you want to take the podium, please, and generate your question, that'd be great.
Yeah, thanks. Some of the recent finance research, especially one of the highly cited paper, they actually find some evidence linking those cryptocurrency or crypto assets trading with some illegal act like money laundering and all this kind of thing. So we know that around the globe, the legislative bodies, they're working hard to try to come up with new laws, not just on those crypto trading, but maybe on this new DeFi platforms and things. And from this IASB standard kind of point of view, and how should a firm account for those potential new laws? Because we still have no idea what those laws will lead to. Like, especially if, like, for example, if just some country ban certain type of crypto assets completely, then how can account for the risk? Should a firm just recognize them or just disclose, or what kind of thing they should do?
So the great thing about building a principles-based accounting system is that you build the principles that are going to handle the unique situations. And I think, to take the last case first, if you're in a jurisdiction where cryptocurrencies are banned, then your measurement of the contractual rights and obligations is pretty clear. They're illegal. So that simplifies things greatly. We will certainly watch and monitor the treatment, because it affects all those contractual rights and obligations, which are ultimately the responsibility of the preparer to measure using the principles, not ours. I mean, clearly we're going to provide guidance, and if they're not handled correctly, then if we hear that it's important and the high priority, we'll move in updating that. One of the things we have to look at, though, is the prevalence of the issue. And we last updated the figures about a year ago, but the last time we updated, there were still less than 75 preparers under IFRS that actually held any form of cryptocurrencies or digital assets. So it's still not a hugely prevalent issue. You recognize that it's growing, and the legal and regulatory landscape are changing quickly. So you don't want to be behind the curve. Certainly, you don't want to wait until every reporter in the world has cryptocurrency, and then you say, okay, now we should really take a look at this. But I think it is a balancing act for us of, as these regulatory climates change so quickly, and we're reading the same articles you are about the SEC and particular companies, that we need to balance that sort of quick moving regulatory environment with where we go and how prevalent it actually is, because I think a lot of these things are circular. Preparers might not want to own them until they know what the regulatory status is, and part of that is knowing what the accounting is. Right. On the other hand, you don't want to create accounting and then have the regulator step in and say, yeah, we're going to ban everything here.
They might end up doing that. So you suggest, you feel that it'd be helpful that the regulators take their positions first, and then the accounting standard setters can provide proper guidance?
I think it's really hard to create accounting standards when the legal rules around a particular asset aren't clear. And it's not only the legal rules, but the basic nature of most of cryptocurrency and the idea of decentralized finance is that you build individual rights and obligations for each instrument. And so having that many different rules, we really have to focus on the core principles and say, these are the principles that you will use to apply to all of them versus this particular one.
Thank you very much. Are there any other questions?
Uh, I will actually ask a question on behalf of one of the participants who could not make it to this. Professor Vivian Fang from the University of Minnesota. She researches on cryptocurrencies, and she asked this question that do you see the investing landscape in the US being any different from the investing landscape outside the US? And do you also see any difference in terms of the reporting rules for crypto between FASB versus IASB? I think partly you have answered it, but still will.
Yeah, on the second one, I think clearly the rules are slightly different in
Right.
that the international accounting standards will allow for classification as inventory,
Mhm.
and will also allow upward revaluation gains that are not recycled through net income.
Mhm.
I think the core is basically the same. I think
Right.
we're all getting
Intangible
we're all getting to an answer that the industry doesn't necessarily like under the current accounting rules, and now we've got to make a decision going forward.
Right.
In terms of whether it differs in the US versus internationally, I haven't seen any large differences. I mean, it really does seem to be an international phenomenon. I've certainly seen more companies and startups in the US, but maybe that's because up until about a year ago, that's where I lived. So I'm just not seeing as much. On the other hand, if you look at the geographic distribution of proof of work and things like that,
Mhm.
it's not a US centric concept.
No.
So it certainly seems to be more international than you would expect, looking at least the companies that are doing individual things on the creation side.
Well, we have a former FASB board member, Mr. Halsroeder. I was wondering if he agrees with it or not.
Can you see me now?
Yes, we can.
I'm sitting in a long school line to pick up my daughter. So
Okay.
Okay.
Hi,
So that's any other questions?
if I could just chime in real quick, I think Zach has done a great job answering a lot of the questions, particularly about cryptocurrency. I have one observation and one question. The observation is several people observed that the IASB and the FASB were regulators. And I know Zach knows what I'm going to say here. Neither of those boards are regulators. They are standard setters and have no enforcement powers. I know it frustrated me to no end some days that we could not enforce our standards. And I think Zach probably over time share that same frustration. The question I have, Zach, is now that one country has adopted Bitcoin as its official currency, would it be permissible in those countries that adopt it as an acceptable currency to use that as a basis for accounting? In other words, I could have my balance sheet and income statement presented in Bitcoin or, whatever cryptocurrency we were talking about. Would that be acceptable? My building is 33.537 Bitcoins.
So I don't necessarily know the answer to that. I haven't thought about it.
I hadn't thought about it either until listening to this call. And that is the logical extension of what we're talking about. And if so, that brings a whole nother level of volatility to balance sheets and income statements. So while it's nice to talk about the accounting, if we go down that path, it could become the basis for presentation in terms of balance sheets and income statements. That would be your currency of record, in effect. So I just leave with that thought, Zach. I didn't mean to throw you a big curveball.
I had not thought of that. I have a tendency to believe a lot of preparers are allergic to volatility in their financial statements. So that might be an impediment that's practical more than theoretical. I think we lost Al too.
Oh, yeah.
Okay. And any
If-
other questions?
Yes, we have another question from Bandikanta Mishra again, if he wants to join, add this question again.
I didn't have a question. I was just giving a comment and answer to the
Okay.
point that has been raised, that if you set an exchange rate between Bitcoin and the US dollar, so if it's reported in Bitcoin, you don't care, just convert it to US dollars. That exchange rate setting is a challenge. But if there's an exchange rate, you just convert, okay, 1 Bitcoin, 2.3785 US dollars. But can we set an exchange dollar? And on the reporting thing, I was saying, US reporting is far more stringent than non-US reporting. So there is a risk that Bitcoin, given its haziness, might make it easier in non-US economies to hide things, only as is in US, because US reporting standards are far tougher, far more stringent. So that risk is there. I would think that, Jack may disagree with me, but that's what my opinion.
I think my bank would agree.
So if there are no more questions, I think we'll be calling it a day. We really appreciate Zachary for his time and energy and answering all these very tough questions. I mean, I really appreciate your time and energy today. Thank you so much. And I believe I'll turn over to Partha right now to conclude.
Thank you so much, Dennis and Zach and every participants. I think we had a very wonderful discussion today and every one of us benefited from it. Thank you so much.
Thank you for having me.
Thank you. Thank you.
Bye-bye.
Bye.